Hi there, and welcome to another version of Hawk's Scan Sentry Report. I am Hawk Arps, Vice President of Jan Arps Traders Toolbox, and as we do every week, I want to take the opportunity to look at the markets through some of the best technical analysis indicators out there on the market today. We're looking now at the markets as we get into the week of April 15th, 2013. So let's take a look at a few charts without further ado. Well, let's start out by looking at the market indexes, as we like to do. And this week I'd like to focus on the Dow Jones Industrial. Like many of the American market indexes, it's just on a rampage going up. As you can see, the triple trender is bullish in all three time frames. The trend strength index is confirmed bullish, and the fear greed is bullish too. What else would you expect now that we're making all-time new highs in the Dow Jones? Of course it's going to say everything's bullish. So the question is, how long is it going to keep running? How long can this rally last? So in order to explore the likelihood of continuation, especially in the longer term, I decided I would look at historical information to see how the Dow Jones has responded when it has made all-time new highs in the past. So let's go back and look at some even more historical information. Let's see what it has looked like on a monthly basis when we've made new highs. Here we are in the most current part of the chart where we finally made new highs. But how did it look in the past? Did it turn around and test it immediately, or did it just keep rallying? Well, I've drawn some blue lines here when it at previous highs. You can see we had a high here in 98, and when it broke through that high in 2004, early 2005, it didn't really look back. It just kept going. If we look back further in history, you can see another blue line right here, made new highs in 1972, and that was broken in 1983. You can see again the Dow Jones just took off and never quite looked back. Historically speaking, again, we have another couple of examples. Here's another blue line that I drew from the great crash in 1929, when that was finally broken in looks like 54. They finally made new highs. Again, it just kept going. So historically speaking, I would say that the chances of this rally continuing in the long run appear to be pretty good. We had some excitement in the gold markets this week. We're looking at the daily chart that we started looking at several weeks ago. We noticed several weeks ago this bearish divergence, this overbought signal, and published this blog saying we were looking for further moves to the downside. And of course we got that. We found said support level was here in the 1550, 1560 range. We bounced it, tested that, and then on Friday, man, the bottom dropped out. All of these stops were run, and there was nothing but selling going on. So we have another market to look at and see how this might have responded when it suddenly made lower lows. We don't have any contemporary data at this range, so let's just drill down to a longer-term chart, like the weekly chart again. And you can see here that our next support level looks like about 1463, which was the highs that we were looking at, the high area back in 2011. So everything is bearish. Triple trender is bearish. Radar 3 is bearish. There's just nothing but bearish. So of course, we have to look at a shorter time frame. Here we are looking at a 4,181 share chart, and you can see quite clearly how smoothly the bottom dropped out of the gold market. You can see we're getting a few signals here. We got an oversold signal. We got a pivot divergence signal here. But you know, when you have something trending this strongly, you're often going to get oversold signals. You don't want to take the oversold signals against the trend. You only want to take the ones with the trend. Here you have overbought signals at each of these pullbacks, which would have been excellent opportunities to get into this move as it was declining. And even this divergence we see here, the radar 1, I would not call this confirmed divergence yet because we haven't really seen this valley form, and besides, in a market trending this strongly, you're going to see divergences until it finally washes out at the bottom. So in conclusion, I would say we are looking for the gold market to continue to fall until we find the next support level, which I believe we said was in the 1450, 1460 range. Let's take a look at the crude oil market here. You can see I have the daily chart and a 6,500 share chart on the screen here. We're looking at the daily chart. You can see we're still in a downtrend. All the trenders are bearish. The trend strength is bearish. So I expect to see this continue to move down. Here we do see support level around 89.83, which we could pretty easily break. We'd have to see the radar 1 fear greed indicator make lower lows than this negative 2.28. Otherwise, we're going to be seeing divergences there. If we can get strong selling pressure below this low right here, then I would say that the next downside target is going to be somewhere around 86.71. On the shorter term chart here, is a 65,000 share chart. You can see we recently had a beautiful pullback 23 overbought signal. This is what we call pullback 1, 2, 3. So I see this as a pullback divergence in a downtrend. I expect to see this market continue downward. You can see this whole move down was preceded by a nice bearish pivot divergence. Here's your pullback divergence here. So again, I expect to see crude continue to move to the downside. How about we take a look at some equities? As you know, every week I like to point out a potential long and a potential short. And this week, for my long stock trade consideration, I'm looking at NetApp. And here's a daily chart of NetApp. You can see on Friday it had an incredibly large Keltner bar, as some people call them. To me, this is a triple trender bar. It broke through all of the trenders with a lot of strength. You can see radar 1 is now showing bullishness, and triple trender is now bullish, and so I expect to see the trend strength start looking bullish. But how do I know that this is really going to keep going up? Well, I don't know that this is going to keep going up, but I'm confirming my analysis by looking at the weekly chart here, and here you can see NetApp on a weekly chart. You can see in the last week or two we had just last week we had a breakout of the downtrend line here, and the week before that we had a pullback 23 to the upside. Now I see this as having some longer term upside potential, particularly due to this beautiful bullish pivot divergence down here in radar 1 fear greed, which showed a turning point back in the fall of 2012. I'm seeing buying continued. In the longer term, the weekly chart, I'm seeing stronger buying than selling. So this is to me, this big bar that showed up on Friday is a good entry opportunity for a longer term kind of swing trade. I wouldn't be surprised to see a little bit of selling in the first part of the week. You often see that after a big bar like this. But if it does start the week a little low, that might be a better entry opportunity for a potentially long trade. What are we looking at on the short side this week? Well, this week's short video is going to be off of the Netflix. And the reason I'm looking for this to go short is, well, we topped out. We had a nice trend exhaustion 3 up here at the top. The buying pressure pretty much petered out. And now we've seen some profit taking and mostly selling. What I really see here, though, is the triple trender has turned bearish. Now all 3 trenders are bearish, and we've got our first pullback into the short-term trender, while the trend strength index is bearish. So to me, this is a good early entry to the downside. I'm going to be looking to sell Netflix short this week. Let's take a quick glance at one of the Forex markets. This week I'm looking at continued movement to the downside in the Aussie dollar, New Zealand dollar. Here you can see on the daily chart, right here that we're in a good downtrend. The triple trender is bearish. We've got confirmed bearishness in the trend strength index. I wouldn't be surprised to see a little pullback to this 1.2317 zone before continuing down, but I am looking for this one to keep going south. Here's a shorter term chart, 180 minutes. You can see we've recently got a good entry opportunity. This pullback 23 is a good pullback in the downtrend here. A good way to get into a trade when it's trending as strongly as this is wait for these pullbacks that you can identify by the overbought 1 trend exhaustion signals or the pullback 23s. Of course, never take the overbought oversold signals when they're against the trend, when you're in a strongly trending market. So a little bit of advice. But this pullback 23 is in the direction of the trend, so I'm feeling pretty good about that one. Once again, thank you for tuning in to Hawk's Scan Center Report. I hope you found some information that you can use, something that's going to be helpful in your trading this week. Remember, all of these examples are purely for educational purposes. Yon Arps Trader's Toolbox is not recommending that you buy or sell anything at all. So, good luck, and may the trend be with you.